Hey everyone, welcome back to Ragtag Stacking. In today's video, I'm going to be talking a little bit about silver price and why I think that the silver price is not going to be moving too much in the upward direction until something drastic happens with the manipulation that we're seeing with the silver. So if you're brand new to stacking, like I've seen in my comments, there are quite a few people saying that they have just started their stack a couple months ago, or they just started picking up silver and gold this year. Then you might not be too familiar or might not know at all just how much manipulation takes place in the silver markets. So I was new to all this too. I didn't start until midway through 2020. So it was just all of the videos that I've watched and the stuff that I've read to try and educate myself. And the thing that opened my eyes the most is when I saw what the paper silver to physical silver ratio is. And that is an outrageous 250 to 1. So there's just a lot of paper money floating out there that all of these big banks and hedge funds and all the money managers, everyone that has a big share of the pie, it's just easy to manipulate between each other to artificially keep it low. Now, unfortunately, I have no idea what the answer to this problem is. I don't know how this could possibly be fixed, and I really don't think anyone is looking into it. The people that are benefiting from this manipulation are making money off of it, obviously, or they wouldn't waste their time in manipulating it, and it really doesn't seem to give them much incentive to reform or to stop doing this. So when I'm looking at silver price, I can't really realistically think it's going to go anywhere until all the manipulation is done. And the only time I can see it going up while manipulation is still happening is if it benefits the people that are manipulating it. If they can somehow down the road say, hey, instead of suppressing it to this point, I think we might be able to make a charge and make some money off of it if the price goes up. If that day is to ever come, then rest assured the silver spot price will skyrocket. If it benefits the people that are manipulating it, the price will go up. So yeah, it kind of sucks when you think about it that way, where it's, your only hope for a big surge in silver spot price is that, it will benefit the people that are manipulating the prices. But as I said, this might be a new theory or a new topic for some people that are just into stacking. So I did find this article that kind of went in a little more in depth into specific things that are being manipulated in the silver market and what impact it has on the price. So what I'm going to do now is I'm going to jump onto the computer and just go through this article. Okay, so this is the article here. It's on sunshineprofits.com, and just jumping right into it, that silver manipulation says that market manipulation, also called price manipulation, can be defined broadly as purposeful effort to control prices. This sort of manipulation exists in financial markets as traders try to influence the markets. It may be responsible for some short-term aberrations in asset prices, including the price of silver. However, there is another, more specific definition, according to the U.S. Securities and Exchange Commission. Manipulation is intentional conduct designed to deceive investors by controlling or artificially affecting the market for security. This includes rigging quotes, prices, or trades to create a false or deceptive price of the demand for the asset. A popular belief within the precious metals community is that gold is manipulated, and the same goes for silver, genuinely manipulated downwards in what is described as price suppression. So yes, we're all familiar with this. We have heard about the price suppression, and that it's been artificially kept low, and that silver price is nowhere near where it actually should be. But it's just all of that paper money muddying up the waters and keeping it artificially suppressed low. And it's going to go more specific into the silver price manipulation. It says, more specifically, many silver investors believe that the market for silver is systematically manipulated. There are many variations of this theory. Some say the precious metals are under the thumb of central bankers, while others blame big banks and their use of derivatives, naked shorts, and high-frequency trading for decline in the price of silver. There are also worries about the discrepancy between paper silver and physical silver, the fairness of London trading, declining inventories at COMEX, and the leasing of silver. At first glance, this theory makes sense, especially considering that the silver market is much smaller than the gold market, so it is easier to influence. while a number of financial institutions have already been fined for influencing or manipulating silver prices. So yes, as I remember doing an article talking about how the paper to physical ratio was at 250 to 1. And I also did another one where it was a trader, I believe from Merrill Lynch. I can't remember exactly where they worked, but it was a gold trader just breaking down how easy it is for him to manipulate gold prices. But yes, I remember it was manipulating it downwards. He was taking his profits by selling it at a certain point, and he was letting other people know within the company through email that they were going to be doing this, and it was going to be dropping a certain amount, and then they would know that once they started dropping, other people would start seeing it and try to cash out before it got even lower, and then they would go ahead and reap the rewards of the lower price and start buying at that lower price. And it was just that easy to manipulate. And silver is even easier to manipulate because the percentage point that it moves is so much more than gold does, obviously, because we've seen the price of silver compared to gold. It is a lot easier to double up silver going up or even going down, taking 50% off. It's a lot easier to do that with silver than gold. I know 50% is a big number. That's just hypothetically speaking. It says, moreover, it is commonly known that in the 1960s, the U.S. government kept the price of silver frozen at $1.29 per ounce. Additionally, in the 1970s, the Hunt brothers for some time attempted to corner the market in silver. Whether they purposely intended to manipulate the market or not, their actions pushed the price upwards, not downwards. I skipped over a bit. They went into the Hunts doing their thing in the 70s and 80s. I will leave a link in the description if you want to read through the whole article. I mean, the Hunt stuff is interesting, but I think this is a little bit more. The naked silver short selling is something that is, obviously it seemed to be affecting the markets quite a bit. Many people accuse bullion banks of naked short selling of silver in order to drive down the price. What is naked short selling? Let's start with silver short selling, which is the sale of bullion that is not currently owned by the seller, usually borrowed, and the subsequent repurchase of that metal. The idea is to take advantage of the price decline as it enables to repurchase the white metal at a lower price. And we say that the short selling is naked when the silver short selling occurs without first borrowing it, or at least ensuring that the precious metals can be borrowed, so the short seller can sometimes fail to deliver silver to the buyer. So this is a potential nightmare because, if enough people look to get their silver out, there's clearly not going to be enough silver there to meet the demand of people wanting to get it. If you just look at the ratio, 250 to 1, there's 250, stakes to that one claim. And it's going to be impossible for everyone to be getting what they want because there's just not as much physical as there is made up paper. It says the impact of naked shorts is thus controversial. The popular story says that the Fed uses bullion banks as its agents to put on naked silver shorts on COMEX to drive down the price of silver. It protects the US dollar's value and enables banks to repurchase silver at lower prices. So again, seems like a lot of back scratching, a lot of inside deals there, and they don't seem to care as long as it's a short-term relief for them. They really don't seem to care how big of a financial crisis this could be and how badly it could ruin a lot of people's investments and a lot of savings with that, because it's built on a bunch of lies. And this last point that I wanted to touch on, just because the whole silver short squeeze never really made sense to me, how people thought it was going to be like the next GameStop with this, but it says the Reddit rally and short squeeze in silver. It says at the turn of January and February 2021, the price of silver skyrocketed to its highest level since 2013. As retail investors flooded the market, it all started 1 week earlier when Reddit users coordinated their actions and sparked a rally in the GameStop shares. Another post on the Wall Street Reddit message board on the headline, the biggest short squeeze in the world, it said silver 25 to 100. Urged investors to buy silver. The idea was to expose shortage of supply and to push prices up. As a result, BlackRock iShares Silver Trust, the largest ETF tracking the silver, recorded unprecedented inflows while silver prices were up more than 9% on February 1st, 2021, the biggest gains since the Great Recession. And continuing here says, however, a short squeeze similar to the one that happened in GameStop is unlikely. This is because the silver market is much bigger and more liquid than GameStop. Before the recent actions inaugurated on Reddit, GameStop had a market cap of 1.4 billion, while the size of the silver market is in the hundreds of billions or even trillions. The silver to be found on London's vault alone is worth 48 million. Trying to corner the silver market would be like trying to drain the ocean. So yes, it's true. I mean, it did go up that little bit, but then, it went right back down. It stabilized. And the only thing we really got out of that short squeeze was the even higher premiums that we're still dealing with. So unfortunately, the silver squeeze did not have the effect that it was going for. In fact, it kind of just, we've been dealing with the repercussions of it with those higher premiums still. But those were just a few main points that I want to touch on in this article. If you would like to read the entire thing, like I said, I will leave a link in the description to this article so you can go ahead and read it at your leisure. Okay, so that was the video, and like always, anytime I read something about the manipulation of silver, it always makes me mad. I'm never in a good mood after I do this videos like this, because it just really pisses me off. It's silver is a really good way to preserve your wealth. It's a good way to get out of the financial system, get some of your fiat currency that can obviously be inflated to the moon. It's good to get that out of that into a physical asset that can't be inflated. Unfortunately, the physical silver that we all stack and buy is kind of connected to another sort of, it's not a fiat currency, but the paper silver is kind of acts like fiat currency, where it can just be made up out of nowhere. You know what I mean? It doesn't need to be physically there like the physical silver bullion that we see here. We already know that it's at 250 to 1. So, there's always a chance that that's going to go up to 300. 250 isn't set in stone. If they need to make up, a bunch more paper contracts for the silver to manipulate it and keep the price where they need to be, rest assured that's what they're going to do. So yes, let me know in the comments what you guys think. I know a lot of people, they don't think the true price of silver is what we're seeing here, and they do think that it is much higher than what it should be, and the manipulation is keeping it low. So if you do think that, then well, silver is kind of on sale right now for you. If you think it should be double, triple, quadruple what it is right now, and it's artificially being kept low, then you should be backing up your truck and picking it up while it's at this discounted price. But again, when you start thinking about it, it is kind of it is kind of a shitty situation to be in, being as a lot of the stuff that you are buying as as that hedge against inflation, as a physical savings account. It's a very smart thing for you to do financially. It just kind of sucks that a lot of it is left up to these people that have their own interests in mind, and it could definitely affect the value of your stack going forward. But anyways, that's it for today's video. Thank you so much for watching, and I hope you come back for the next one. Thank you.